Welcome back to another video. It's your guy Cyrus FX. So today I'm just going to show you how we do analyze gold and how you can get perfect entries for gold. So you can see that our chart, we are on 30-minute time frame. So on a 30-minute time frame, like depending on any time frame you will be viewing the chart on. So we start by 30-minute time frame. So remember, we do analysis depending on the past price. What price has been doing in the past is what we base on to predict what price is going to be doing in the next or in the future. So as you can observe the chart, like if you go back to this side, like the market was you can see that it was moving downwards. Then here it changed the character and then started rising up. And then here we recognize a reversal pattern, then which it broke, then it reversed. And then now it is doing some change of character here. So what do you first identify? You identify first is the trend. The trend, like we go to the past price. So in this scenario, if we go to this side, it was an uptrend, then a reversal. So we are going to look for the key points where the price might have reacted. So in this scenario, I'm going to look at where price broke that change reversal pattern, and then in this scenario, I'll mark that level. In most cases, I consider candle closures. I don't consider wicks. I don't know how other people do it, but we consider candle closures, not wicks. So I'll mark that level there, and then here market prices were falling. Prices were falling, as you see, were falling, and then here it formed a swing low. So a swing low we identified. So it means I'm going to mark the swing low down. The swing low, but remember, as I told you, we consider candle closures. So, but most of the times I prefer like touching this whole horizontal line to the wall. I call it the wall, so to make the thing look more clean and more clear. And so once we've marked those two levels, we got the higher point. Like as you can see that the price is in between, so we mark the highest point and then the lowest point, the recent lowest point. In this scenario, we got these where price reacted, and then we have this swing low down here. So what do I do next? I'm going to identify the inner partners, because remember, we got many concepts we follow while doing technical analysis. So I'll drop back to, go to 15-minute time frame. So in this 15-minute time frame, I recognize the bearish scenario for here, and then there was some kind of change of character here. So like the difference between change of character and break of structure is that break of structure, it confirms a continuation in the current trend. So if the market is falling down and then structure breaks, it means it is breaking the structure going to the downside. It means the current trend is likely to continue. Then change of character means a reversal. It means that the current direction is probably changing. The market is changing direction. If it was falling, now it starts rising. If it was forming higher lows and lower lows, it starts forming higher highs and higher lows. So in this scenario, we can recognize a change of character at this point. It broke this recent higher low, and then so we recognize this change of character at this point. So what logic is in at this point? Like what concept is behind change of character? The concept behind change of character I can observe is what we call an order block. order block, the last opposing candle before the break of structure. What does this mean? That if the market was trending to the downside, so I'm going to look for the very last bearish candle before the market started changing direction. In this scenario, I recognize this, let me show you this candle here, like the down one, this candle here as my order block. You get what I'm saying? So I'm going to mark that level, like I'm going to use my rectangle, like it will mark the full candle. So we want to get the zone where, so I'm going to mark the candle, the order block, and so my thing will appear like that. And then you can observe that after change of character, price after filling this gap, because we have this some gap here, and then it came back to the order block and then pushed upwards with momentum. So after marking my zone of that kind, I'm going to look for another opportunity. What could be another thing I need to observe in the market before I get an entry point? So if the market is pushing to the upside or downside, like if you're looking for an entry point, we got strategies. You may look for a breakout. We may look for, we look for a breakout. We look for market bouncing back into the order block. We look for either there has been some kind of attaining liquidity, or there has been filling of a fair value gap. So in those concepts, if they are aligned, or is price at resistance or at support. So if it is resistance and support, we got horizontal resistance, horizontal support. I mean is, and the diagonal resistance, diagonal support. So in that case, it means that you have to introduce in what we call trend lines. Trend lines, you observe the trend, and then in this scenario, you can identify that the market is kind of pushing to the upside, forming higher highs and higher lows. So in this scenario, you can recognize some kind of a trend line to this point here. You can see the main movement, you can like it. So I'm going to mark that level there, and I've identified some kind of a trend line there. So what I will be looking for in this scenario is that if price breaks below the trend line and I get a confirmation, I'm going to enter sales, and my target will be this zone. Or what I will be waiting for else is if price comes back to this zone, how will it react? Is it going to bounce? If it comes back to this zone and it confirms an internal change of character, a bullish one, that means I'm gonna be holding buys to the upside. And then if it breaks, if price pushes and breaks above this zone, it means it breaks, give me a confirmation, it means I'll be holding buys at that point. So when price is still in between here, another thing is that if you identify that there is some kind of a trend line here, now you can look for where price is bouncing the trend on the trend line. So you look for those confirmations. And in this scenario, I can recognize that if I drop back to M5, if I go to M5, I can see that price reacted at this point, so it was breaking this level here, the resistance. So here someone could be entering. So if you're looking at scalping a little bit, so if we enter this candle, then if we target this high you had here, so that will be something like risking 1 to make 2. So that is it. So we are looking at how to get entry points. So we'll remove this, So if you are an intraday trader, the day traders, so you can go back to M15. Now you can either wait for the breakout, then you push down, or you wait for it to bounce and then push up, or break above, then you go up. You know what I'm saying? So this is how we analyze gold. So we'll illustrate how we shall be waiting for. So if we press breaks below here and then retraces a little bit, then pushes up, we shall be holding, we shall be looking for some kind of a sell here. Then if it, or you can wait for it to come in this zone and see some kind of a reaction here, the confirmation, then you can hold buys. You get what I'm saying? Or if price breaks above here, you get what I'm saying? And then get some kind of a pullback, then boom, we shall be holding buys. We shall be holding buys like that. So what else should we, yeah, simply that is how you can analyze gold, but you need to know how to like you should be observant of all those concepts. You should be able to identify this. This was we were considering an order block, but in simple terms this becomes a demand zone. A demand zone, you know, these concepts collide at some point, they combine and become one. So we recognize a demand zone here based on the order block, and then a trend line here. We can wait for a bounce in here. So yeah, simply that is how you can analyze gold, and you know, you can get a cleaner entry with ease, with confidence, and without panicking at all. So thank you for watching this video. Hope it was helpful. Make sure you like, you subscribe, and you share. Thank you very much. Welcome to the Forex Kingdom.